Now, get back to the mundane. I don't know. Get back to something. We're going to talk about the case. I love this. 100-year bonds. The case for 100-year bonds. Got it? Joining me now is our own Taylor Riggs, co-host of The Big Money Show right here on Fox Business, and a very old friend of mine, Todd Buchholz, who is economist and author of The Price of Prosperity. Todd, you stimulated this segment by your note to me and your op-ed piece. I'm going to tell you, when I was in office, I talked to Donald Trump about this many times. And every time I said 100-year bonds, he loved it. He said, yes, we have to do that, yes. And then I'd say, Japan's doing it. Well, we have to do it. And I said, I think Mexico's doing it, or China's, I don't know, whatever they're doing. Yes, we have to do that. There wasn't a lot of total enthusiasm in the others in these Oval Office meetings. But you have Trump on your side, Todd Buchholz. Well, let's start with that. That's not nothing, by the way.
That's not nothing. And look, this has been one of the biggest blunders in American economic history. Because think about it. We could have locked in our borrowing at 1.5% for 100 years. But instead, we're now borrowing at over 4.5%.
This would have been more like, what, during the meltdown or?
Basically from 2000, I wrote a piece in the Wall Street Journal back in 2012. So basically, since the financial crash of 2008 until 2 years ago, we had the opportunity to lock in these rates. And instead, we now spend more on interest on the debt than defense. And it didn't have to be.
And Yellen is selling. Taylor, Treasury Secretary Yellen, I'll be respectful. This is not personal. It's never personal. Just saying, she's selling the bulk of the debt at the shortest end of the curve, 91-day Treasury bills, okay? I don't know why they're doing that. I'm not sure what the rationale is. But in this inverted yield curve, let's see, the 10 years about, I'm going to call 4.5%. Sure. She's selling all the paper at 5.25. Makes no sense to me.
And the 2 years at 4.88, it's creeping up today. So you're paying more on the short end than you are on the long end because that inverted yield curve. I sort of like the idea of century bonds because we had unlimited QE forever, negative zero interest rates. So from my generation and my future generations, we could have been saving so much money that you talked about. Instead, we're issuing rates now and paying that debt expense on yields that are triple what they were just a few years ago, right around COVID. So we're just wasting that money and burdening the future generation.
No, that's right. Look at selling all these short and rolling over every 3 months is not funding the debt properly. It's not bonding the debt out the way a company would bond it out. And in your piece, you cited a whole bunch of companies that have sold 50 to 100-year bonds.
Imagine Disney sold bonds. They call them Sleeping Beauty bonds. Now, get this.
Nice.
Norfolk and Southern Railroad, a railroad, sold 100-year bonds. Will there be railroads in 100 years? It doesn't matter. They were able to sell those bonds. But the Treasury just decides to blunder. I don't know. Every night there are 120 productions around the world of the musical Hamilton. I think every night Hamilton should come forward and weep for the disaster that is at the Treasury Department.
The progenitor of U.S. Treasury debt, Alexander Hamilton, just in case Cardi B happens to call me. Is that her name, Cardi B?
Yes.
I'm still reeling from that in the last segment. I want to, you know what I mean? I'm very current. I'm going to turn her into a supply sider next thing you know.
I'm going to see you bust a dance move anytime.
Can you? Well, I've done this on set before. Taylor Riggs, before we descend any further into this.
Just the liquidity issue.
Yes.
I wonder, they're probably going on the front end of the curve because it might be more liquid than maybe a century bond of a 100-year bond. But I still think that there is appetite for U.S. debt. And I would argue that now is the time, right?
Well,
we still are full faith in quality.
Our average duration of debt is 5 years. Britain is 15.
Right.
Can we at least catch up to the Brits on our way to 100?
Just on the 100, and then we'll move on. But Mexico has long.
Mexico,
50s,
Austria, Ireland, Belgium.
Ireland's my favorite with a 12.5% corporate tax rate. China has sold long bonds. China.
Well,
Japan has sold long bonds.
Japan has sold long bonds. Yeah.
They got a lot of debt. They got more debt than we have.
And Janet Yellen was asked about it when interest rates were 1.5%. And she said, we've looked at it and we're just not, we've looked at it seriously, but we're not going to do it.
I'll tell you what, just forecasting my vote. If Mr. Trump wins, He will restart all of the oil and gas drilling. That will put more supplies on the market from that production. That will lower energy costs substantially and will spill over, hang with me, to a lower inflation rate and much lower interest rates. At that point, it's time to go to 50 or 100 bonds. If he ever gets a second chance, I believe that is exactly what he's going to do. Taylor, in our last minute, the Fed minutes came out today.
Huge.
There'll be no interest rate cuts in my lifetime.
Nope. Larry, you and I are obsessed with Fed meeting minutes. We're making them fun again. We're making them great again. They're not boring.
We're the only ones in the building.
We're the only ones in the building. But we're making them fun again. Look, they're actually admitting that, yes, maybe hikes. I don't think hikes are going to happen, but they're understanding that cuts likely aren't happening. Maybe you could get one in December, but I think they came out from the minutes of that meeting and saying we could look at maybe hikes, but we aren't cutting anytime soon. Higher for longer. Higher for longer. The center of intellectual gravity on this board is a fellow named Christopher Waller. Okay. He was appointed during the Trump administration. I had something to do with that. He has said for a while the evidence on inflation is not good enough to cut rates. And I think people should listen to him. You know why? Because other Fed governors and presidents listen to him.
Yeah, and let's make the list of team transitory, right?
Yeah.
Joe Biden, Janet Yellen, Paul Krugman, and all sorts of eminences assured us inflation was just a passing thing. No need to worry about that.
Got to give Larry Summers, two Democrats, Jason Furman and Larry Summers.
Yeah,
got to give them credit.
Those guys have great integrity.
Summers called the spending bill in 2021 of March, the 1.9 trillion. Summers calls that the original sin of inflation. Yeah. I think he was dead right.
Larry and Jason have shown great integrity.
Yeah, no, I agree. All right. Todd Buchholz, very good to see you.
Good to see you, Larry.
Taylor Riggs, always thank you very much for helping out. Now, folks, be sure to catch Taylor along with her co-hosts Brian Brenberg and Jackie DeAngelis on The Big Money Show, weekdays, 1 p.m. Eastern, right here on Fox Business every day.